Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, guys, our guest for this week's show is real estate investment expert and fellow mobile home park operator, Frank Rizzo. Now, Frank is the co-founder of Stonetown Capital Part, or I'm sorry, Frank is the co-founder of Stone Capital Investors, has more than 20 years of experience in real estate as a broker, as an owner, and as a syndicator. For the past 12 years, Frank has been active in the mobile home park space, and during that time, he has acquired and repositioned over 20 communities. Now, starting his entrepreneurial journey in high school, Frank obtained his real estate license at 19 and went on to earn his Series 7, 24, and 63 licenses by the early age of 23. He later opened his real estate brokerage, Cornerstone Realty, at 28. Now, today, guys, we'll take some time and dive deep into the business of mobile home parks. And, it's a business that I've been personally active in for almost 2 decades now. I'm kind of aging myself as I say that. And so really excited to have Frank on the show. As I was telling him before we started recording, it's probably been a couple years since I've actually had someone on the show that's also in the mobile home park space. So excited to have him on here. And so without further ado, I'd like to welcome my guest for today's show, Frank Rizzo. My friend, welcome.
Thank you, Kevin. Thank you for that introduction. It's always a pleasure to talk mobile home parks with you.
Yeah, absolutely, man. As I mentioned, last time we probably chatted was in Nashville at a conference. So excited to get caught up with you again, and we'll do it now. Over the mic here, and we'll share kind of your insights, my insights on the industry, and hopefully have a fun conversation around it. But also add value to those that are tuning in and might not be as familiar with the mobile home park investment space. So how about we back it up a little bit, Frank? For those that might not be familiar with you. I gave you a brief introduction there. I know there's a little bit more to your story than that. Take a few minutes and tell our listeners a little bit more about yourself, your background, and I think more importantly, how you found your way into the mobile home park space.
So, as you noted before, I think I've always had that entrepreneurial nature from being as a teenager. And my first business was out of high school, where my senior year, I started a distribution company where we were selling snack cakes, to stores in Brooklyn and Staten Island, where I would go to the depot in the morning. I would load up my truck, go to school, go to a couple of classes, and then I would go on my delivery route, which by the way made me very popular in high school, being that I had a whole delivery truck of snack cakes sitting outside. And that led me to always look for a pathway where I knew I was going to work for myself. And when I had the opportunity at 19, I did get my real estate license, which kind of exposed me to the transactional side of the business, gave me kind of an insight a little bit on, putting deals together, and learning from a few people in that office who had, wealth of knowledge and experience. I did work on Wall Street for a bit, but I realized while I was there, I didn't like being confined in an office. I didn't like doing the same thing every single day. And it kind of led me back into real estate, working with a developer on Staten Island, where we would find distressed or mismanaged properties locally and look for ways to, we were speculating, look for ways to create some additional value in them, flipping those properties, buying land, getting them through the zoning process inside of New York City, getting it entitled, and then moving from there. Eventually, that led me to start my own brokerage, where we focused on alternative investments. And just by happenstance, working with a client of mine who was struggling with some of their multifamily buildings, helping them kind of reposition those assets for sale, and they were getting ready to retire and move down south. They had asked me to help find them something that would replace the income that they were going to be missing from their apartment buildings. And what came across our desk was, these mobile home parks, which I knew absolutely nothing about. But the more I looked into them, and back in 2012 and 2013, as you can attest, because it was very difficult finding information on mobile home parks. It was still it was at that point even more of a fractured industry. But everything that in my research that I found was that, you had a very sticky resident base if you did your job right, if you managed your park correctly, if the residents owned their home. And it was a very consistent cash flow, which is what I knew my client was looking for. So I made the recommendation for them to buy a mobile home park. And fortunately for me, he said he would only buy the mobile home park if I put my money where my mouth was, stayed in the deal, and ran it for him. And when I got down there, and the park was in southern Georgia, and when I saw what it took to run that, and believe me, I knew nothing at that point, but I just knew that I was going to make this work for him. I just fell in love with the space, because for me as an entrepreneur, as an investor, not only do you want to make money, right? You want to have it to be profitable, but you want to do it with a purpose. And you see how small changes have big impacts, not just on the bottom line, but on the people that you're serving down on the ground. And it was just a very rewarding experience for me. And so, fast forward, speaking with my partner in New York, we decided that this was something we should really take a deeper look into. And 27 parks later, here I am, and I have an opportunity to speak with you.
Yeah, no, that's exciting. So that was back in, I think you had referenced 2013 era. Is that?
Yeah, the first park I was
Yeah.
involved in, we purchased back in 2013.
Okay. Yeah. Fantastic. So fast forward to today. What does your company look like today? Just a 10,000 foot view, geographic, footprint, where you guys focus your time, energy, and effort. Generally the size of your team, and just again how it looks differently today than what it looked like back in those earlier years.
So today we're in 3 states. We're about to enter our fourth. We're focused in the Southeast. We're in North Carolina, Georgia, and Alabama. We're looking to expand into South Carolina. We have our team is comprised of me, my partner Eric, CFO Peter Falcone, who's part of the executive team. We have some staff here. We have a back office staff overseas of roughly about 11 people, VAs that work with us to help keep our touch points with our, the data and the touch points with our residents, and probably about 20 to 24 people on the ground servicing those communities, whether property managers, maintenance crews, and or landscaping.
Got it. Okay. No, I appreciate that. And your company though is based out of New York, correct?
Uh, we're based out of Staten Island, New York, which is
Okay.
the mobile home park capital of New York City. We have one mobile home park in New York City, and it's in Staten Island. So we are the mobile home park capital of New York City.
Have you ever considered investing in your home state of New York into mobile? I know there's lots of mobile home parks we've owned historically years ago and in New York State, but have since moved on. But just curious as to, is that a consideration at some point?
Well, and I say this, Kevin, because I know that you've had some experience
That was
in
a
New
loaded
York.
question, by the way.
I will say, when I first started investing in New York, I had a full head of hair. And for those not seeing this, I'm completely bald. So I try to stay away from investing in New York City, and I would not invest in a mobile home park inside of New York State.
Yeah, fair point. Fair point. Yeah, I always like to joke and say that life is too short, right? Like you can definitely do deals and have a less stressful time doing so in most other states in the continental U.S. So yeah, I'll leave it at that. No offense to those that live in New York, and no offense to you. Obviously, you live in New York as well, but I just prefer to take my business elsewhere at this point in time. Moving on here. So obviously, the last couple of years, Frank, it's as it relates to like capital markets and even transactional volume, things have shifted quite a bit, and I don't know exactly what your deal sourcing looks like, if you guys do most of it in house, if you leverage brokers, if it's a mixture of the two. But I guess just generally speaking, I mean, has there been any major evolutions or pivotal changes that you guys have made as an organization in the last 24 to call it 36 months, just to shift with the markets, right? Like, interest rates went up at an all time, fast pace. It really, seller expectations really hadn't adjusted. They're starting to finally adjust a little bit, but just what have you guys done to keep up with deal flow?
Interestingly enough, as the rates had stayed elevated, I guess the initial expectation is that you would start to see some price reduction, but seller expectations was such anchored to prices back in 2021 and 2022.
Yeah.
It became challenging to get the velocity of deals that you might have liked to have. And then I don't think that it's not a question of capacity, because I think there's a lot of sponsors out there who have the capacity to do more. I think for us, one thing that we've been very intentional on is in the markets that we're in, we maintain good relationships or constant contact with the owners in and around where we are. And I think that helps, because then when something changes or life change, or we're there, we're that first point of contact for them. They know that we know the market. They know that we have a certain comfortability. So that's one thing that we've been very intentional on, to make sure that our outreach with neighboring owners is intentional and consistent. Mm-hmm. And secondly, we believe that if you have a good broker, keep that broker relationship. So we'll constantly keep updated with our brokers about what we're doing, what we're looking for. And even if the number doesn't work today, having that offer out with the broker or the seller, I think is so important, because, one of the deals that we closed recently, it took a year and a half to finally fall to us. But it was because we were constantly out there, and here's our offer, here's our number, here's where we're willing to execute, here's the reasons why. Let's keep the line of communication open. And you've seen it, I'm sure, Kevin, in this space. People will put in offers, and then when they start peeling back the onion, they realize that maybe they don't want to be in the mobile home park space, or maybe that's not the deal for them. So I think being consistent, being present is super important if you want to find deals in a market like this.
Yeah, no, I agree. One other thing I've seen, and I've been on the wrong side of it, just because I choose not to play ball in that manner, is, and this is probably more as it relates to the last, when interest rates were low and there was just hyper competition for any deal that came to market, was that, like, you'd always find there's always a couple groups that would just put an exorbitantly high offer in. I mean, literally go above and beyond and then some. And maybe with the intent of, once they peel back the onion, of how you phrased it, they start finding things that maybe they could, use as a foundation for the conversation of a retrade, right? And so, any thoughts there of how how can you stay competitive when, again, this space is this different? You got started back in 12 and 13, a long time ago. Very different world back then. I mean, very different world as far as you're making an offer on a property. There might not have been another buyer, right? If so, it was another mom and pop or two mom and pops that were actively buying. It wasn't really a large professional operator that you were competing against. So, but today it's a very different world. It's quite common to have multiple offers, sometimes 7, 8, 9, 10, maybe even more than that on one respective property. So how do you guys, how do you make yourself stand out? I guess the better question is, like, how do you make yourself stand out, as like, hey, I might not be the highest offer, but I do believe that we are the best buyer. We've got a good track record. Any special way that you guys help your team stand out amongst all the others?
Yeah, that's a key point that you hit on, because you are going to get in, and you are going to probably compete with other operators. And I think one of our strong points is that where we're geographically located, we've been very specific about it, right? Mm-hmm. So when we go to a seller, if it's in a market that's right near us, we have that proximity that we could say, we're here, we've executed in this market, we've done the diligence on this market, we know what we can and what we can't do, and so we could save you some time when you come with us, right? That's not going to shock us or surprise us when you find maybe there's a county ordinance that maybe another operator might not be familiar with. So I think that's one thing that we've been specific, and we try to bring that point on. Secondly, having that track record also of time and experience in that market also helps explain, this is something we can do. These are situations that maybe are in your park inherently, that they might be an operator, but they might not be an operator that can handle whatever that situation is. Mm-hmm. And being able to show that track record, I think, helps make that stand out. It doesn't work in every instance, But one thing that we do try to emphasize is if they come back and they make these points, if they haven't said it now and they make these points to you later and they want to retrade, well, they either didn't do their homework, right? Or they gave you that higher number because they wanted to retrade you on that and know that our number already reflects that. So we're, that's where we can have people come back to us a 2nd or third time. And to your point, I mean, it's a little bit more challenging now because of all the new people, all the new players in the space, but it doesn't mean that there's not still opportunity there. You just have to be consistent and you have to be persistent with it.
That's right. No, I agree. One strategy that we've leveraged over the years, and it's maybe not as much as what we should have, is whenever possible, we will get a testimonial from a seller or from a broker that we've done transactions with, and include that in our LOI. Whenever we're making an offer on a property, and I don't know how much weight that's carried, but I would have to think that in some instances it might be helpful. Um, Maybe this is a strategy you guys might be willing to leverage as well. Not from a seller per se, but this is years ago we had a community in Georgia that we turned around, and we had a lot of opposition from the local government. In fact, it was a small enough town to where it was right outside of, it was in the Atlanta MSA, but it was a little incorporated village, and so they had their own mayor and their own chief of police, and they're really their own local government. And this park happened to be right across the street from the mayor's office, and so they had to drive past it every day. And the guy that had owned it, that we bought it out of foreclosure, but the prior owner had just neglected it, had been neglecting it for years, and so it was really a sore topic for the local government. It was the one thing they couldn't control, and they had to look at it every day, and it was really the blight of their little community there. And so when we went to speak with him while we had it under contract, we went to share our grandeur plans of how we're going to turn this around and just make it something that the town was proud of. He shut us down pretty quickly and just let us know that if we spent our money in his town, that we'd be wasting it, and that he's not going to stop. He's not going to sleep until he gets that thing shut down and gets it eradicated. So he was pretty firm in his stance, and he was a pretty big dude with a handlebar mustache. So anyway, we still bought it. We still continued forward with our plan, turned it around, and about a year later, I got a call from him. It was an apology. And actually, I got him to let me write me a letter of recommendation, because we dealt with this with a number of other local governments, just opposition, not cooperation, and but I'm wondering if that could also, something like that could be leveraged, when you're buying a community, right? Like including that as a cover letter or including that in an LOI. So just food for thought there, as you guys, I'm sure you meet with local municipalities. I'm sure that you guys know a lot of turnarounds. You're similar to us in that you go in, you find something that's in a good location, but it's just been neglected for a long time. You go in and you just inject a lot of capital into it, redo the infrastructure, redo roads, redo signage, redo the homes, and just completely change the landscape, make it something that the towns are proud of. So anyway, just food for thought as we talk through this. That might be a
No,
strategy.
that's a great strategy, Kevin. And one of the things that we have done, especially when we talk to some sellers and we'll offer different options, and one of them being seller financing,
Mm-hmm.
we have had some of the former owners either come work for us, or we will tell them like, hey, we've been in this business, or I've been in real estate investments for 20 years. We've never defaulted on any seller finance note. But not only have we had some of the former owners, not only finance us, but they've also financed us and came to work with us. And by the way, if you ever need to speak to them, they're more than willing to do that. And a lot of times just offering that,
Yeah.
they might not take you up on it, but just knowing that, hey, it's there and we're only saying it because it's true. And if you called me on it, I could give you a Rolodex of a couple of people. But that's a great idea to put that testimonial into the LOI. I think that
Yeah.
definitely makes it stand out a bit.
The switching gears a little bit here, Frank. I think maybe you share the same sentiment, maybe not. There wasn't a lot of information back when we were getting started, but I think the one misnomer, and I think it's even carried through even to today. I see some folks out there that might be fairly new to the industry or might be selling some type of digital product or something, but really kind of glossing over the operational intensity of the business, right? It definitely is not a set it and forget it. Everyone owns their own home. Everyone pays their rent on time. No one ever leaves because they own the home, and it is a very sticky resident base. We've got residents just like I'm sure you have that have lived in our communities for four or five decades, and they've got multiple generations of the family living there, and so it is a very sticky resident base. But it is it is pretty far from set it and forget it. And so, with that being said, I'd love to, just your perspective. What are some of the biggest operational challenges on the day to day that you feel are greatly under discussed, not necessarily, spoken of? And anything that comes to mind?
Yeah, I'll tell you the number one thing, because we talk about it, right? And we talk about these are communities, and we don't talk about what makes that community. And it's that touch point with the resident. And I know people think, well, people stayed in these communities because they couldn't move their homes or it's expensive to move their homes. And I think that's partially true. But I think there's an emotional attachment that residents would have with their owner, even the former owner, in the land, right? They felt like they were
Yeah.
part of something. The owner knew who they were. They knew what their situation, they knew their family. And because of that, they were willing to accept certain things that might have been substandard. And we've seen in the last few years where there's some operators who came in and just, raise the rent, and people would leave. They would find that money to move because they lost that sense of what that community really is. And I think if you don't keep those touch points with the residents and let them know that they're part of something, then it's transactional, because it's different than, multifamily, or you have an apartment, it's transitory. People come in, they rent a 2-bedroom, they buy a house, they leave. It's only a finite period of time. But when people are part of a community, I think they believe they're part of something bigger than themselves, and they want to stay there and they want to be part of that. And I think that's something that some operators miss. But you have to build that sense, that culture inside of it. And I don't think it gets talked about enough, because it's easy to talk about the numbers. But I think that building that culture, building that community inside your park is such an essential element to that park's success. And one of the things that we focus on.
No, that's great, and I appreciate that. And I think it's a great segue into kind of the next question. Would love is do you have a particular process that you follow when you guys take over a community? Obviously, like there's a fine balance between growing revenues. These are investments, right? Like, and we look at these as investment vehicles. However, these also are individuals. These are people that are living there with their families, right? And so there's this fine balance of maximizing revenues, but also generating the best return for our investment. So what do you kind of have when you go in somewhere in order to start building that, your reputation and establishing rapport with the residents? Is there a certain framework that you follow?
Yeah, I think as an operator, you have to go in and you have to lead first, right? It's tough for me to go in there and set expectations for you if I haven't shown you what that bar would be. So we like to, make sure that the residents know that we're going to raise the standards in the communities, and we're going to hold ourselves to that, and we're going to help them along the way. So if they own a home, Kevin, I know you do a number of parks where you've got infill in there, and I'm sure you could attest to it. It's tough to sell a brand new home if the homes to the right and left of them are just a mess, maybe covered with some moss. Maybe they don't have their skirting. Maybe their decks aren't set. And sometimes the resident might not have the capability of doing it. So we always look at it like from the WIFM, what's in it for me, right? So what's in it for the resident? If I can go in there and say, look, we're going to fix your deck, we're going to fix your skirting, we're going to clean up or provide you the ability to raise the standard of your home on us, it becomes a little bit easier to say, hey, instead of you paying out of pocket to do that, to meet community standards, but hey, we're going to raise your lot rent a bit to help you offset that cost. Residents understand that. And I think they're appreciative of the fact that they're getting some value out of that lot rent increase, whether it's their underpinning has been, fixed, whether their skirting has been done, whether they've gotten new decks or fence. So we're conscious of that on the way in, of what can we do to help those residents that would help us get to where we want to be. And I think that in doing that, we try to structure a win-win-win scenario for all the parties involved. And that's one of the things we look in our process that starts in diligence. Like, what do we need to do for the residents so they can appreciate us being there, and we can start making this investment work, allow us to infill, allow us to get rents closer to market and things of that nature.
Yeah, no, that's a great point. And that's, we've done that for years. We actually just recently kind of coined a program around, we call it the Hug a Home program. But anyway, but same idea, right? And it's going and helping those residents that don't necessarily have the financial means or capabilities to enhance their home, whether it be skirting or a deck that's rotted away, or maybe it's just paint or a cool seal the roof, trimming trees around the unit, whatever it might be. I think that's wonderful. And it's honestly, I've looked at many deals over the years, and every once in a while I come across one where someone's kind of taken it partially. They've turned it around partially. They brought new homes in, but new homes aren't selling. They're not moving homes as quickly as they had hoped they would. And it's a decent market from the outside looking in. It's a decent market. And one of the biggest red flags that I quickly identify is that they have not done anything to help enhance the older units that are on the right or left side of this brand new home that they brought in. On top of that, they might not be
Yeah.
maintaining the landscaping. There's weeds growing around the skirting and just really simple things that are, you know, fairly noticeable. And everyone's a visual shopper. I mean, initially, the initial stages of the sales process is, the visual sale. And if the first thing you see, curb appeal is like this to the left, this to the right over here, undesirable units. And then the next thing you see is obviously, skirting around or cracked grass everywhere and weeds coming out of the skirting. You've almost lost the sale right then and there. So no, I love that, buddy. I think that's absolutely wonderful. And it's a win-win all the way around. It's for everyone involved. It's a win-win. And it's a great
Because it's
minimal
not,
investment. It's not much.
it-
It doesn't take much to spruce up a unit either.
and it's, people forget that even though you might have the most affordable unit in town or the city, the person who's buying that unit, that's the largest investment that they're making.
Absolutely.
And if they look out right next door and they see that it's you're telling everybody that I don't care because it's not mine, why should they care? And I think
That's
you
right.
have to look from the perspective of the person on the other side of it. They're making an investment to be in your community. We owe it to them to show them the best possible look of what we're
Yeah.
doing and how we're doing it and how we want that community to be. And that's something that drives operationally. That's something that we constantly in conversation with our team about.
Yeah. What does your buybacks look like today? I know that you'd referenced three states and I think a fourth that you're adding where you guys focus your acquisitions. But generally speaking, are there things that you really like or things that you potentially even stay away from, like, private utilities, major infill projects versus that of a, mostly stabilized community? I mean, what's kind of your, in a perfect sense, what fits inside of all four corners of that buy box?
So, we've looked at, and having had gone through a number of these communities, we've been able to create some filters for us that where we could see what works and what doesn't, right? And so sometimes it depends on, are we buying a park? It's 100 lots and 90 of those lots are filled with homes, even if they're not all physically occupied, but the homes are there. If that's the case, I don't need it. Maybe I don't need as much growth in the city, right? I'd like to be in I can only control what I can control inside the community in those four walls. I don't want to be in, there's certain towns and cities I don't want to be in. But that being said, if it's got the homes on site and they're habitable, I know I could fill them, right? If I have to do infill, it's something different. I need a little bit more velocity in that market. I need to have the economy that's growing. I need to have a median home sale that's a little bit higher. So we'll look at different filters. And at the end of the day, we'll kind of, each area has a little bit of risk associated and we account that for the price, right? There's no bad real estate. There's only bad prices. But one of the things that we do look for, we want to make sure that we're not in a town that's crime ridden, right? That we know that we can't overcome there's certain objections that we can't overcome. And there's, for instance, there was one town, I don't want to name it in Alabama. I mean, everywhere on the outskirts of this park, it was burnt out developments. It was drugs. We don't mind going into a park that has challenges. And we've done that many times. But if the city itself is challenged, there's little that we can do to control that. So we will tend to shy away. So we do want to make sure that we have a city or a municipality or a county that's willing or is looking for investment, number one. And then based on the park, it'll determine like the needs of the county. So we've been in counties that are as little as 30,000 and been very successful. And we're in counties that have 300,000, which are doing very, very well. So, I mean, we're agnostic to that. It's just a question of price and, execution of the business plan.
Yeah, I mean, to your point, when you reference that town in Alabama, I don't know the town, but I always like to say that you can take, the roughest of rough parks, things that have been neglected for many, many decades, as long as it's in a good school district, it's in a good part of town, where the path of progress is either heading or is already there. Maybe this is just the one blighted element, but it's surrounded by mostly good. I can change every aspect of that because I know that if there's a bad element in there, that I can remove the bad element. I can inject capital to that property, make necessary improvements, completely, change it, the perception of that community. And I know once I do that, I'll attract all the good folks that are really looking for a clean, safe, and affordable place to live. The people are out there and they're looking for it and they're looking to live in that part of town. I just got to get it back. You'll get rid of any of the riffraff or make any of the necessary improvements that haven't been done for many, many decades. However, on the flip side of that, you could take the prettiest park, one that's been maintained really well, but it's in a horrific market. The owner's done a great job. He's been putting money back into it. He's been trying to do his best to maintain it. He redoes the roads. The residents that do live in there take care of their units, but if it's surrounded by a degrading local environment and a city that just doesn't care, and there's jobs that are moving out of the area, they're not moving into area, and there's a population decline, like you can't fix any of that. Like it's on the wrong side of town, or it's in a bad school district, right? The one that no one really wants to send their kids to. Like you can't fix any of that. Those things are all out of your control. And so while you might have a pretty community, and it's something you should be proud of, the owner should be proud of. You just unfortunately, like all those other elements are outside of your control. Like you can't fix that. And
Absolutely.
so like it's literally like you end up dying on the vine on things like that. So anyway, I would much always rather have that, rough community that's in a good market because I can fix every other element of it. It's easy
Correct.
to fix. It's just a matter of the necessary capital budgeted to do the enhancements and fix those necessary repairs.
And it's
Um,
and it's interesting because you don't necessarily have to be in the fastest growing market. Like we look
no,
for stability. One of our best performing communities is in Scotland County, which is not a huge county in North Carolina, but it's a stable community. So we knew exactly there's population is stable. They needed affordable housing. They didn't have any new product being built, whether it's in multifamily, new development, and the mobile home parks that they had in that community were, all run down. Our community there was that we purchased was the largest one. It's 134 units. We've been able to infill. Anytime we brought in a home, there's always a waiting list of people looking to be in there. And it's been a very consistent, steady performer for us, even though the town itself isn't one of the fastest growing towns in the country, right? But being steady, you can do that. So to your point, it's if you have stability, if you have a community that's not declining, I think you could do very well in this space.
yeah. What are some of the biggest lessons learned? I mean, again, you've been at this now over a decade. Surely you've gone through the ebbs and flows, but if you just had like, one or two big takeaways that you're like, just man, I wish I'd have known that when I first got started, what would those two be?
So I guess looking back, to your earlier point, you don't realize how many different hats you're going to wear when you get into this space originally. So, starting out, you're doing everything. And, we spend a lot of time now just refining our processes and workflows to make sure that we have the right people doing the right jobs. And most importantly, and you know this, Kevin, you have a 75-acre park. There's a million things you could do at any point in time, right? And one of the things that we've gotten very intentional on is making sure that our people are always focused on the most important thing that's going to move the needle that week. Because you can get caught up in a lot of small jobs. And, when you're running a 75-acre park with a million, 100 people and a million different things that could possibly go on. But it's what's the most important thing? Let's work on that. And then let's work on everything else afterwards. And let's catch up next week and make sure that's done. And I think that's one thing that we focus on and we work on trying to get better, each and every day at.
Is that driven by specific KPIs? I mean, I guess how do you prioritize what the one or two most important things are on a weekly basis in each respective community? Just curious,
You
'cause
know,
I mean, I think it's something we try to evolve each and every day as well operationally, try to continually get more efficient with what we do and make better decisions. But so, just curious how you guys handle it internally.
we do look at, I mean, there's some specific metrics that we look at, whether it's on the, sales and leasing side, whether it's on, the project management side, whether it's on the collection side that we're tracking in the unit turns, how fast that we're getting a unit back onto to the market. So that's super important for us to watch out. And each week when we meet with the managers, we'll go over their numbers to make sure that they're executing on their on the vision and the business plan for the community. But
Hmm.
it's also in, because when you run a park, there's a lot of things that where the manager themselves can get distracted with because of they're getting hit. I mean, I don't think people realize how much work the managers really do. And I know you spent a lot of time on the ground. I mean, they're always that point of contact for your resident. So it's making sure that they understand and they can prioritize what's most important in terms of the execution, whether it's, overseeing an infrastructure project that's being done at that time, or a cleanup that needs to get done, or, whether it's, making sure showings are getting done so that we're infilling effectively. So it's making sure that they're also focused on, where we need to be, and where that community needs to be going.
Yeah. I'm curious to know how you guys handle this. I know historically in years past, and I think how this business originally started, it almost took a lot of kind of the framework from like the self storage space, where like it was pretty common to have community managers live inside the communities. They would live and reside inside the community, and that's how we ran the business for many years. In fact, there was up until probably 5 years ago, it was a requirement. If you were going to be a community manager in our community, either we provide a home or maybe you already lived in the community itself, and we were just basically bringing on payroll and giving you now a job title. Um, how do you guys handle that? So now today, like we've completely flip flopped, and now we might have one or two that are remaining that are kind of legacy communities where that's we still have the same managers and we've just kept it a status quo. But now we actually don't allow managers to live in the park, and we might give them a housing comp plan and put them in a local apartment or give them some type of housing allowance as part of their compensation, but we do not allow them to live in the park any longer. We found that really has helped create a balance, a personal life slash work life balance to where their doors not getting knocked on, at 7 or 8 o'clock at night, or they're not almost available 7 days a week. So I'm curious how you guys handle that.
So we have some communities where the managers live there. And
Hmm.
then we have some communities where they don't. I've had some communities where the managers wanted to move in. So we're agnostic on it. We don't make it a requirement. But if a manager wants to live on site, we do like that. We do like having some of our maintenance and grounds crew live on site,
Yes.
and
Yeah.
we work out a way to give them some sort of housing allocation for that, because we find that especially if something happens off hours, it's great to have
Hmm.
somebody on site that could address an issue. But we leave it to the manager and we don't make it a requirement. But we do give them an incentive if they do move in, right? So if they do move in, they can get a housing allocation for that, which we think that there's a value if they do want to be there. But that is an interesting point, and I've heard both sides of the equation. We do want the managers to have that balance. We don't want them to
Yeah.
feel overwhelmed because they are doing so much. And I've just found that by far and large, I mean, most of those managers that you'll come across, I mean, they're extremely dedicated to the community. Like they
Yeah.
they have an attachment to it, which we which we uh, which we love, quite frankly.
Yeah, absolutely. Yeah, and I should have stated as much. So the maintenance guy, I think you made a really good point there. That that is a huge benefit in our eyes of having a maintenance personnel, somebody live in the community that actually knows where the water lines are, knows where the sewer lines are, knows where the shutoffs are, because typically when you've got an emergency, it doesn't happen during normal business hours, right? It's happening in the evenings or on the weekends or something like that. And having someone there that's knowledgeable and that can jump in and get it handled quickly without calling a third party plumber or third party, like just someone that could jump on it right away is a huge benefit.
Well, even during the last storms last year, we were in southern Georgia, and we had two communities that got impacted. I mean, power went down, trees came down,
Hmm.
but we had our staff that lived on site, and fortunately, knowing the storm was coming, they had the generators set up. So when power went down and we did have private water supply, we were able to get back up and running quickly. We didn't have to worry about them having to try to travel when roads were closed. They were already there, and our residents, while they were impacted because they were in the eye of the storm,
Hmm.
the impact was minimal because they were able to get back online quickly. And I think that was a testament to our team. I mean, they did a phenomenal job, but also having them there kind of solved some of that issue. To your point of having to drive there and find somebody at 2 or 3 o'clock in the morning, they were actually there and able to assist the residents. So
Yeah.
that was a key component, and we were very very fortunate that they were there.
Yeah. Well, Fran, this has been a fun conversation, my friend. I'm going to be respectful of your time. I know I've actually kept you over the allotted time frame here, but it's been a fun conversation. Always very insightful when we talk shop and talk about the mobile home park space. I guess for those that are that like to learn more, they've enjoyed the conversation. They want to learn a little bit more about you and your company. Where's the best place to track you down?
We have a site called trailerparkturnaround.com. You can track our video series where we are. You could see exactly what we're doing on site to turn around some of these communities, and that's a great place to visit. And you could also catch me on the podcast, the MHP Exchange, where we'll talk with other operators or people in the MHP space, talking about all things mobile home park related.
Yeah, and I've actually enjoyed your videos. I've watched a number of them. It's a great. I mean, it's a reality TV shows with it. You've done a great job of putting that together. Actually, you probably got a killer team behind the scenes that are helping do the production and all that. But that's high quality stuff, my friend. I appreciate you putting it out there.
Well, you know what, Kevin, there's so many people who want to see the work, and especially for the people who are
Yeah,
involved in the platform, and they don't realize some of the work or the intense effort that it takes to turn these communities around. We just thought it was a great way to share some of the stories and bring to life some of the things that are happening down in the field. But it's been
yeah.
a lot of fun putting it together and just making a documentary of it. But I always love getting feedback from other operators when they
No,
see
it's
that as well.
good. Yeah, you're gonna be getting a call from Netflix soon. I think is what's gonna happen. So, well, my friend, as always, I appreciate you coming on the show and I appreciate you sharing your insights. And it's always good to catch up with you, Frank.
Thank you, Kevin.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success.